Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway here at VerifiedInvesting.com, and we're going to cover the key data, the key chart analysis, top trades of the day, the key levels to trade, covering stocks, commodities, as well as some crypto in the mix. All right, so first and foremost, we got retail sales out this morning. They came in a little bit weaker than anticipated. Again, the expectation was for a 0.6% increase. They came in at a 0.4%. So the big question is this telling us the consumer is beginning to show signs of weakness? We'll have to watch and see what the markets do, but what we did see yesterday is better than expected CPI. The yields fell and the stock market ripped higher. All right, let's go over to the big board, check out what the market is doing here today. If we take a look here, we can see, again, the S&P is basically around the flat line, right? So this was yesterday's CPI report right here, that big move up, and then you can see we chopped basically throughout the day, or at least the first part of the day, and then went into that light volume float into the end of the day. Overnight, it was a gentle kind of sideways action, and that's really where we are seeing the markets at this point. The only thing to point out here, folks, is that you can see this one little down move right here in the S&P in the morning session here, pre-market. What's interesting about this is this coincided with a little bit of an uptick on the 10-year yield. The 10-year yield, or interest rates, went like this for that period, and it brought the market in. So you see this really nice correlation here of the markets kind of inversely related to that 10-year yield, and that continues to be unbelievably key to the markets. All right. So let's take a look here, guys. If we go here and just take a look real quick, we have the S&P 500, or the SPY. I've put in my two key trend lines that I continue to follow here. All right, what are they? Well, this again is one going back to August here. That's the high pivot here just before kind of that August decline that we saw that led us right into this area here, or this is actually from 2023. But look at how this line, this top line, connects through this high. There's our August low, and this high, and this high, right? So we have a very defined upward resistance line. Now, the reason why this is important, what it does is it gives you guidance to understand if the markets were to really take off. Let's say Trump is inaugurated next week, and he announces some big, good policies for the stock market. If the markets really rip up, you have a lot of resistance right there, and you can use that, or I'll use it, as a shorting opportunity. And again, that's right around that 6,200 level. Now, I'm not necessarily anticipating it, but the key is, as a trader, you always have to think about all scenarios, right? You want to think about the ones that are good for you and also the ones that are bad for you as a trader, or if you're not in a trade, where are you going to go short, where are you going to go long? That kind of planning makes you very aware. It keeps you less emotional, and that's the key to a successful trader. All right, so we have our long upsloping trend line here. Then we take the low right here, and we can see very clearly connects right through the August low right there. And sure enough, just a few days ago, that's where the low on the S&P was. And so now we have a very defined trend line below, which tells us two things. It tells us, number one, if price comes down and hits it, that's going to be support. But it also tells us that if price breaks this line right here, then you get your next big decline, right? So again, two upsloping trend lines. Notice they aren't perfectly parallel. They're slightly coming together. That means it's more of a wedge pattern. And ultimately, that tells us that at some point out multiple months, if price is still stuck in that range, it will eventually be forced to either break up or break to the downside. All right, so again, just kind of the idea here is building a game plan, right? Being understanding of the key levels so that nothing surprises us, right? If the markets go up, we know our resistance level. If the markets come down, we know our support level or our breakdown level. And again, being prepared is unbelievably important. All right. So let's go back to the charts here and take a look. We do want to take a look briefly at the 10-year yield chart here. So what I'm going to do on the 10-year yield here is we're just going to draw some trend lines in on this chart. And so the first things I'm looking for is, okay, where do we draw our trend lines for where we've kind of stalled out here? So the first thing I'm seeing right here, look at this. From this little high pivot right there, and I'm just zooming out just out of curiosity to see the bigger time frame. So that's an interesting little trend line right there for the short term. And you actually have an underbelly here that's very similar to what we're seeing on the S&P 500, right? Two lines, they're not quite parallel, they're kind of coming together. And what this tells me in the short term, by this low matching this low to this low, it tells me that if price were to fall on the 10-year yield, right? If the 10-year yield drops, where is technical support going to be? You're going to find support at around 4.45 to 4.5, 4.5% essentially. All right, now again, this can be used because this could tell us that yields are set to decline, which means maybe the stock market goes a little higher in the near term, but once it hits here and bounces, maybe at that point, the stock market then turns around and starts falling since there's an inverse relationship with yields. All right, so again, always good to look at the key drivers of the market. Always remember, guys, always remember that right now the 10-year yield is an inverse relationship with the S&P 500 because the U.S. economy is strong. At a certain point, when yields start going down and the stock market goes down, the reason will be, and this is really important, the reason will be is that the economy now is really faltering in the U.S., and so yields going down is making people panic, right? It's not so much about, oh, cheap money is great. It's more like, holy cow, we're going to go into a recession, which means the consumer is going to pull back. All these valuations on these stocks don't make sense anymore because obviously iPhones aren't going to sell as much, all these other things, and that is going to be the catalyst there. So right now there's an inverse relationship. Eventually you might see them together. Okay. Let's jump back here, guys. Real quick, yesterday I went into a long tirade on Wolfspeed. Wolfspeed, again, after they announced that they had finished their at-the-market $200 million capital raised by selling shares. At the time, Wolfspeed was trading at around $5.30. It closed yesterday at $6.68, up 38%. And again, guys, listen, how high do these things go? No one knows. I'm a swing trader, so again, I'm looking to ultimately unload a little bit as it goes higher and just take a little bit off the table. Then you can always let some run and see if it turns into that 5-bagger or something. That's really each and every one of our own prerogatives to make sure that we're following what we feel comfortable with. But the point being is that that analysis was clutch. Notice how the chart here, if we go back to the chart, it was at its multi. I mean, this was since 1996, the lowest point on this stock with so much potential upside. I actually still think it's a great opportunity, but listen, 38% is a big move on the stock. Just like Rigetti and some of these others, they're going to have bigger pullbacks along the way. Now, Taiwan Semi reported earnings this morning. That stock is actually up here this morning nicely on the day. It did get as high as this 222-ish high pivot. That was right at 4 in the morning when pre-market began to trade. It then faded down to about 214 and then has floated back to 218. Now, what about trading levels on this? How do we look at this and see trading levels? Well, the first thing that I'm seeing is there's a high pivot and a high pivot and a high pivot. So let's connect those and find out what level that gives us. So that gives us a potential resistance today at around 224 to 225. So that might be a tradable level. It's still a little ways away from current price, but that would be my first level to keep an eye on. Now, secondarily, if we take a parallel here, and we draw a parallel through, let's draw it right through these lows, and we drag it up, and we bring it right here. Look at this, guys. This is pretty cool. I'm going to erase the white line. In fact, this is so cool. I always like to go to the big board for cool stuff. But, all right, so when we look at this, what does this tell us about potential secondary resistance? Well, number one, we had our first level, 224 to 225. So that might be a day tradable level, right? So you have two different types of trades that I look at. One is day trades where I'm in and out intraday. I might be in for 5 seconds. I might be in for 5 minutes. I might be in for 50 minutes. But ultimately, that's an intraday trade. It's what a day trade is. Swing trades are the other side of my trading analysis, where I look for moves that are going to come in the near term, but over multiple days or weeks. It could be holding it for 3 days. It could be holding it for a week or a month. Now, this is now a bigger picture. And again, the bigger the picture, the longer the time frame where it could play out. That's a very good key to remember. So what I do here is I say, okay, well, if we look here, 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 and here, all the way through. I mean, look at that. Now, there's one little blip there where we opened lower and then rallied back to the line. That was the August gap down. I don't know how many of you guys remember that, but that was insane. Like, the panic was palpable. But in any case, very clearly, we have these lows. Now, if we drag that parallel up, oh, look at this. Right there, right here, and right here. Wow. Now, the extrapolation on a swing trade basis allows me to say, and this is, again, just pure logic. I don't care if Taiwan Semi makes semiconductors like they do, or they make widgets, or they make burgers and fries. It doesn't really matter. It's the chart that I'm following. No bias, couldn't care less about the company itself. All I want to know is that, okay, every time it hits here, it pulls back, right? So the idea is if it rallies, it gets to a new all-time high up here, let's say around 230, I don't know, it looks like around 233 or so. If it gets up into that range, then what do? We see, okay, this likely should see some sort of retrace. That, my friends, would be the swing trade level on Taiwan Semi. So again, just following very simple rules in the charts enables us to make smart decisions. Now, what's interesting is that, think about this. If this stock rallies all the way up here, what are most people, like those of you guys that are not watching, what is the regular retail folk going to do? They're going to say, oh my gosh, Taiwan Semi, it looks like it's going to the moon. I got to get long because it keeps going higher. That's the kicker. That's what they want you. That's what the institutions want you to do. They want you to be the exit liquidity at the highs chasing, which is why I say it's a cardinal sin to chase anything. I don't chase stocks or crypto or anything. Again, they want that to be the exit liquidity. They'll be going long the retail folks, while, again, we're looking to short, and institutions know the most likely higher probable outcome here. All right. So, again, good to go over that Taiwan Semi for today, potentially to trade it. Morgan Stanley reported earnings. The stock, again, is up. So, again, we had Taiwan Semi overnight, and Morgan Stanley and Bank of America, two more banks reporting today. Bank of America also reported. But really, you can see here, yesterday we closed, looks like we closed at 130 and change. We're trading at 133. As a trader, $3 on a $130 stock, it's not getting me out of bed, folks, in terms of a trading opportunity. If we look at the daily chart, if you really want to be aggressive, maybe 136 double top here. If for some reason this were to surge dramatically to the upside, for me, I guess I would do something like this. I would kind of look at this. I mean, if this gets to 137, it would still be very high risk, but 137.50 connecting high pivot to high pivot to high pivot, maybe. But even then, again, the stock's only up a few percentage points. For me as a day trader, I need volatility to make money. And I'm not sure if that would equate. So it's kind of an open-ended one whether or not that would be a trade today. Bank of America popped initially on earnings. I had a level that I was thinking about trading pre-market with this, and then I just kind of forgot about it, but it actually would have been really nice. It would have been the double top right here on the daily chart. Pierce of 48.15 or so. It ended up pulling back beautifully off of that. I did not catch it, but you can see, look at the reversal and then kind of consolidation here. Now listen, the stock closed here yesterday, so it's basically flat on the day. So again, Bank of America not getting me out of bed. It would have to make a big move one way or the other. In terms of shortable levels, just connect your short-term pivots. High pivot, high pivot. By the way, what is a pivot? A pivot is a move that ends at a high and then has a protracted or longer-term move to the downside before it makes a new high. So this is a high pivot. And then again, here's another high pivot where you can see significant upside on one side, like a mountaintop, with a lot on the other side as well. What wouldn't be a high pivot that I would look at? Something like this, where it's really just a couple of candles up, couple candles down. That's just like on a little whipsaw. That's not a high pivot. You want multiple days on either side of the pivot that are in the opposite direction there. One upside, one downside. All right, let's get into Bitcoin and just see what's going on there. This is kind of a fascinating chart on Bitcoin. It did have a nice move up yesterday. Now, again, should any of us be surprised that this made a move up yesterday when the stock market had a monstrous move? Remember, the NASDAQ was up over 2% yesterday. What does Bitcoin usually do? It usually goes up. That's what it did yesterday. Now, having said that, it's still within the range. Now, you'll see two new trend lines on this chart of Bitcoin. I put them in. They're minor resistance versus major. I'll go over what that means. But what you can see here is that we still have our lower underbelly of support here. That's continued to hold. And then our upper level continues to be up here, which has now joined forces with this double top right there. That is your monster resistance level. And that makes sense, right? It's the 108,000 all-time high, but it's also the upsloping trend line. Now, the two lines I added in are minor, and for traders out there, this is important. You can see very clearly that this downsloping white line is this high from 108 to your secondary minor pivot high, right? Up move multiple days, down move multiple days, pivot high, right? So the idea is connect that high to that high, and you get this. Well, where did Bitcoin top out yesterday and pulling back today? Right at that line. All right, so again, now you might say, well, why is that minor versus major? Major technical levels are going to be bigger patterns, like an all-time high coming down like this, that's going to be major. A longer term trend line that goes back further. When you have shorter term lines that are kind of intra this bigger pattern, they're going to be more minor. The difference again between major and minor, major you would expect a multi-day pullback or more. Minor might be just intraday or a day pullback, and then it's going to figure itself out. Is it going to break through? Here's a little resistance here, followed by little minor double top right there. Again, both within that bigger area on Bitcoin. Those will be two minor resistance levels before the major. Generally, you don't swing trade minors. Day trade, sure, and you would have seen, I mean, perfect opportunity for a day trade right off of there. But again, majors are really the ones we look for more for the swing trade side. All right, next up, let's take a look at gold. Gold breaking above a wedge pattern. Very good for the gold minor positions. Look at this beautiful move. So here it closed above this trend line. That's not a breakout, guys. That's a potential breakout. It then reversed. Good thing we know, I'm sure all of us know the confirmation signal, right? That I teach in the Winning Trader series. All right, so we know that that wasn't a breakout. It kind of whipped people out. Now you've closed above. If we close above here, then it's a confirmed wedge breakout. Now listen, you do have a resistance level right here that you got to respect. In fact, we might even tag it today at around 27.25. But again, the idea being that this would probably, and I'll just game this out. You know, again, no guarantees I'm going to be correct. It's a probability game. But in general, you would break out, you go to short-term resistance, you pull back, and then you get your bigger move to the upside, probably to double top. That's generally how this pattern would work. The wedge pattern is important. That's been broken. Generally, you'll have some sort of pullback off that resistance, that little minor resistance. Then it gathers its steam and makes that bigger move to the upside, okay? So we'll check back in on that in the coming days, but you know, things like the GDX continue to look good to me. GDX here breaking to the upside beautifully. Newmont Mining is still one of my favorites. Look at this beautiful move off my technical major support range right down here. Never even got inside of the range, just went right to that top point, hit it twice, and then it started to push up. So again, Newmont Mining looking very good as well. Silver had a good day yesterday. You can see here, same sort of deal. It's broken this. Will it confirm today? That's the big question. As long as the economic data stays strong, silver should do okay. But again, remember, being partially industrial, that could be trouble. All right, now let's go to oil here. Beautiful pullback on oil, folks. So again, if you're in my Smart Money Commodities service, let's talk about this, right? So let's bring it up here on the charts. So again, I am short oil, and basically what I did was I shorted some right here, I shorted some right here, and then I added yesterday right there. So it's, again, the way I work, and this is the way I encourage people to think about trading, is always go in a trade. So you have two sentiments, right? You have the general newer investors who, when they invest, they go all in on a position because they are dreaming like a lottery winner, like someone who's playing the lottery. And listen, I've done that too. I mean, you know, I played like the 500 million, and it's just like, oh, I'm like, oh, what would I buy? Like this, you know. So, but that mentality should not be used for investing, right? So when I go into an investment, and this is something I had to learn the hard way, unfortunately, by losing a lot of money early in my career, is that I go in and I say, okay, I like this level for a pullback, but I'm going to play it as if I might be wrong. And that mentality shift changes your outlook. All right, so now I'm not putting all in here. I'm just going in. Let's say I want a 10% position in my portfolio short oil. I'm only going to put in, let's say, 3% here. Okay, so then if it goes up to my second level, I add another 3%, right? And then if it goes up here, add another 3%. So the idea is now my dollar cost average is right in the middle here, and I'm almost break even just with that pullback. And that mentality shift is huge. Now you might say, well, yeah, but if you were right and oil went like that, you wouldn't make as much. True. But the kicker is this, guys. It's not about, in the investing game, it's not about how much you make, it's about how much you don't lose. And that mentality, again, will change your life as investors and traders because it protects you. Protect your capital to grow your capital. Remember that. All right? Some wise words today on the charts. But again, good pullback on oil this morning as I continue to think eventually it's going to break 65 to the downside. Lastly, natural gas real quick. Let's go over that. Nat gas, not doing much here. We have our trend line of resistance up here and our support here, just continuing to grind and chop inside of this range. Again, if there's any trade here, I will let you guys know as always. All right. So listen, I'm going to get right to the trading floor. We've been crushing it out there. I'm so happy so many of you guys have joined us in the Apex Live day trading room. The other thing to mention too, folks, is that you always remember that we have a service that everyone can join. All right. So if we go to my screen here real quick, I just want to show people this. So take a look here on the computer, on the screen. If we look, so this is the home page. Don't forget, guys, Advanced Trader Insights, $20 a month. And what's so cool about this, look at all these reports. I give 3 trades out every weekend that are basically, it's the opening price on Monday to the closing price on Friday. I try to win 2 out of 3 of the trades per week. Ben does the trade of the day. Drew does Market Insider. It's an insider trading report, cycles report one day, options report, currency pairs report, crypto report. We have the daily golden nugget here with Drew Wolfer, which is all about gold. My weekly, so it's once a week deep dive video into all things stocks, crypto, commodities, and then the education by Dr. B, which is a daily educational report. Again, and then not to mention here, or not to forget, Lawton, he does his small cap report as well. So this is, again, the idea here, folks, is listen, I'm all about, listen, I have services that are geared towards high net worth individuals, but I also want to make sure that I am teaching and giving quality out to people out there around the globe that maybe only have $1,000 or $500 to invest. And again, the point being is that the service for $20 a month, it's giving so much value, so much insight that I want you guys to be there and just experience it. If that's all you can afford, I totally understand that. I think we've all been there. Most of us, at least, have been there where, listen, $20 to me when I first started trading was a lot of money. It was a lot. And I had to start somewhere. We all have to start somewhere. And verified investing, I want it to be the guiding light between having someone that doesn't have a lot of money and building them into someone who does have a lot of money. So, as always, guys, your support means the world to us here at Verified Investing. I thank you so much for coming out every morning with the game plan, trading the close, and all of our other stuff. I will see you guys later for trading the close. You guys take care.